Hello, everyone. Welcome back to my channel. This is Ben Morales, your personal financial coach, and so happy to be back with you today. We're going to jump right into this video today. We're going to be helping this client improve their cash flow. So this client is already in their 50s and they're looking for a way to more quickly and efficiently pay off their mortgage debt because, like many 50-year-olds, they have realized that they are behind the retirement eight ball, right? Not a lot of funds set up to the side to retirement. So if we can help them more quickly and efficiently pay off their mortgage debt and put them into a position where they could retire more comfortably, at least not with having to pay off a mortgage, that would be a better financial position for them. Now, this client, they're about 4 years into the mortgage. Actually, this at the end of this year, they'll be 4 years into the mortgage. And we're going to talk about where they're at right now and what steps we take to improve their cash flow, because that's the important thing. Cash flow is key, right? So let's look at their current status. Right now, their income is $7,748. Their expenses are high, $7,628. Now, I will say that in their expenses, they're putting aside $600 into their savings, and they're also putting aside $50 a month so that they can have what the city stickers and the licensing for their vehicles, so they'll be able to continue to maintain driving their vehicles and be in compliance with the law here in Illinois. So that only leaves them, they also have $273,000 and $159 of debt. And that only leaves them at the end of the month with $120 in cash flow. Now, they have the mortgage that we talked about, right? But they also have credit cards, and you'll see credit card number one at $2,340 with a $400 payment. Credit card number two, 2019, that also has a $400 payment. Now, you may look at those credit cards and say, wow, that's a very high payment according to what is still owed. But the reason why the payment is so high is because they're actually trying to achieve paying down this credit card by November this year to avoid interest rates kicking in. So they're trying to chunk big payments to that particular credit card. Now, what happens after November, obviously, the interest rate kicks in, and then they're going to start incurring interest. So along with that, they have a couple of personal loans out. The first ones, they still owe a balance of $4,400 with a $200 payment. And the last one is a personal loan as well for $2,400 with a $225 payment. So you can see they have a lot going on. They're trying to achieve paying off debt. They're trying to achieve, obviously, some of this debt was to the upkeep and the maintenance of their home. So they're doing their best to maintain their home. And they're trying to pay off their mortgage. They're trying to improve their next couple of years to put them in a better retirement position. And they're trying to, as well, improve their cash flow. So a lot happening to do. There's a lot that they're trying to do. In their expenses, as I mentioned, they're also putting aside $600 every single month for their savings. But again, too many things happening up at once. So we're going to streamline it, right? We had the meeting of the minds. We're going to streamline the process to help them improve their cash flow and see how quickly we'll be able to eliminate this debt for them. So that'll be in another video. But in this video, I'm going to show you the easy steps that we'll take to help them improve their cash flow. In order to improve their cash flow, what we're going to do is we're going to be leveraging a special promotion with PNC Bank. They have been doing an awesome job in certain markets, offering clients an opportunity to really quickly and efficiently pay off debt. They still have a HELOC available at a 0.25 interest rate for the first 6 months. So if you are in a state with PNC Bank, go by, talk to them, talk to one of the bankers, talk to one of the reps, and see if this particular offer is being made offered to you in your state like it is here in the state of Illinois. So what we're doing here is when you're implementing a debt tool like a personal line of credit, or rather a home equity line of credit for the velocity banking strategy, I always say what happens on one side, on the cash flow side, is going to have a direct impact to the expenses side. So we can see here, you got a lot of other expenses outside of the mortgage. What we're going to do when we create this personal line of credit on the HELOC side, we're going to start leveraging the personal line of credit, or rather the home equity line of credit. I keep saying personal line of credit. Been doing this so many times that I don't know which one is which anymore. But all joking aside, it's going to be a home equity line of credit. And what we're going to do is we're going to eliminate this debt We're going to eliminate this debt. We're going to eliminate this debt. We're going to eliminate this debt. Now, we can see that when we move all these payments over into the home equity line of credit, we're going to utilize that as a second position home equity line of credit. We're going to see that now you don't have these as payments. So how does that affect this particular family? Well, you're getting back 4 and another 4, another 2, another 225. So when we total everything that we're getting back, because now these are going to be parked, or these are going to be placed, right? Or more common term, these are going to be consolidated into that home equity line of credit in the second position. That means that they're no longer going to have to make payments of $1,225. So in addition to that, we're going to give that money back that was going out to pay these debts, and that's going to go back to their cash flow. So now we add the additional 120 that they already had in cash flow, which brings their total amount of cash flow now to $1,345. So nice number for that. However, at the beginning of the video, I told you that as part of these expenses is $600 that they have set aside for their savings. In addition to that, they have $50 they were putting aside every single month for like the city stickers and the responsibilities of driving a vehicle here in the state of Illinois. So what if we gave that money also back to them? Because those typically, at least the register, the city sticker, you only have to pay that one time a month. Now, if we could reposition the $600 that they're putting away for the savings to eliminate their debt, then how much more quickly are they going to be able to pay off this debt, and at what cost is it going to come? So before we do that, we're going to figure out if we add that back. So we're going to add those two things back to them, meaning they're going to add the 650 to that, which now puts their new cash flow is $1,995. But what's happened as well? If this cash flow now, or rather this is their new cash flow, right? That also is going to impact their expenses. So their expenses are also going to go down by the same dollar amount. And so their expenses on a monthly basis have gone down to $5,753. So that is absolutely amazing. We got them lower in expenses because, again, when we increase their cash flow, this is the new cash flow when we add the 650 to the 1345. When we increase the new cash flow, is going to have a direct impact in their expenses. And when you implement the strategy the correct way, you are always going to see a correlation. Whatever happens on the cash flow side, we'll see an immediate impact on the expense side. So that's how you know that you're approaching this the right way. Now, in the next video that I show, look for that video next week. I'm going to show the actual implementation of this. We're going to show how long it takes them to pay back that all these debts, now parking them into their home equity line of credit. And more importantly, we're going to see exactly how much this cost them. So be looking out for that video coming out next week. Thanks for tuning in. Take care and God bless.